The Committee on Banking, Housing, and Urban Affairs is called to order. Thanks for the two witnesses joining us. Home is a lot more than four walls and a roof. Home is where you go after a long day at work. Home is where your kids play and do their homework. Home is where you plan for the future and build wealth. Home is how millions of families join the middle class. Our homes are an anchor in our lives, but for too many families around the country, a home they can afford and build their life around just feels out of reach. I hear it in Ohio everywhere. I hear it from people in Lima, a city similar to where I grew up in Mansfield, where a new building with 54 apartments for working families just opened. For those 54 apartments, they had 511 interested families. I hear it from rural Washington County in southeast Ohio, Marietta, Belpre, Churchtown, where they've struggled for years to build 48 homes for seniors. I hear it in Franklin County in central Ohio, Columbus, where the population's grown by 14% to more than 1.3 million people, but housing supply hasn't kept up and prices have been rising for years and years. With more people with not enough homes, 40% of renters in this country are paying more than they can afford for housing. And that county, with its world-class schools, its skilled workforce, its great quality of life, will only continue to grow. I hear these stories from across Ohio. It's not just happening in Ohio. Whether you're in downtown Columbus or Minneapolis or in rural South Dakota or Wyoming or South Carolina, the problem's the same. Housing is too expensive. It has been for years. It's been for far too long. One big reason is we don't have enough of it. For the past decade, rent has gone up and up and up. 1 in 4 renters pay more than half their income for rent. And when more than half of your income goes to rent every month, it's hard to juggle all the bills you already have, let alone save for a down payment. High rent stops people from becoming homeowners. So many families think, if only I could come up with the down payment. The money for a down payment is what stands between millions of Americans, the dream of home ownership, and building generational wealth. That's why my bill to support first-generation home buyers, Down Payment Toward Equity Act with Senator Warnock, and the Helper Act aimed specifically. The Down Payment Toward Equity Act is broader. The Helper Act for teachers, firefighters, and police officers to allow them to buy homes in their communities and other sources of down payment assistance. All of that is so important. Secretary Todman, Director Thompson, you know these challenges because your agencies are at the center of our efforts to lower the cost of housing. Your agencies don't build housing, but you're on the front lines of our housing markets. Your job is to make sure there's affordable financing for the housing that builders and housing providers create, that families can get a mortgage to buy their first home, and that as Americans get older, they can still live safely in their homes. And both of your agencies have announced changes that should help increase housing supply and bring down costs. Following calls from Senator Reid and me and others, HUD acted to improve access to financing for affordable rental housing through FHA and the Federal Financing Bank. This will help housing providers in states build and preserve more affordable housing for renters across the country. HUD's long overdue update to loan limits for manufactured housing, its new guidance to support conversion of old office space into homes will open up new housing options, especially in cities like Cleveland. As at FHFA, you've eliminated upfront fees that Fannie and Freddie have in the past, charged lower-income first-time home buyers and borrowers who couldn't afford a big down payment to begin with. You've also refocused Fannie and Freddie and the federal home loan banks on their roles, not just in financial markets, but in helping to support housing that families and communities need. But the fact remains, housing prices are still far too high. They have been for years and years. It will take all of us working together, housing providers, federal, state, and local governments, to lower costs. HUD and FHFA need to do more to be vigilant and ensuring that taxpayer money is actually serving families, not enriching shady landlords and wealthy investors. In Ohio and around the country, Wall Street firms and other outside investors swoop into communities. They buy up properties, they evict tenants, they drive up local housing prices. We should pass my Stop Predatory Investing Act to end their tax breaks for buying up numbers of single-family homes. We need to ensure that all our housing agencies are on the same page and working to stop not in any way supporting this predatory business model. State and local governments have a lot of influence over the housing in their communities, and more cities and counties are making changes like updates to zoning, like shortening lengthy approval processes to open up housing for open up opportunities for new housing and expand access to affordable home ownership. HUD is a critical partner in supporting that work. Earlier this year, Franklin County Commissioner Kevin Boyce testified in the Senate on behalf of the National Association of Counties about the critical role that HOME, CDBG, and the Housing Trust Fund play in helping counties of every size to address housing needs. Local communities depend on this partnership. And even with more housing, some families working low-wage jobs and some seniors on fixed income still won't make enough to
They can't hear the room.
Sorry. Was that? Okay. Sorry. Okay. HUD's housing assistance programs are critical to keep rent affordable. I didn't think that was you. You've never done that. So. Okay. Well done. I'm almost done, Senator Scott.
Take your time, Mr. Chairman.
HUD needs to make sure they work effectively and efficiently to serve our communities and protect our investments. Congress needs to do our part. Last month, this committee had a hearing on legislative proposals to help expand our housing supply and bring down the cost of housing. We must continue our bipartisan work to move forward common sense proposals that will help expand housing options and reduce costs. I look forward to continue to work with Ranking Member Scott on this committee toward that goal. I look forward to hearing today from the two leaders before us about what they have done, what more they can do, what resources they need to get their input on what Congress can do to make housing more affordable for renters and for homeowners. Ranking Member Scott.
Thank you, Mr. Chairman. Thank you both for being here, Acting Secretary. Congratulations, 30 days, long time. So we expect you to be completely prepared for everything we're going to talk about over the next couple of hours, likely. Thank you, Mr. Chairman, for holding this hearing. I've been asking for about a year to have both of you in front of us, so it's certainly something that I think is absolutely essential for us to be able to hear from our regulators as often as possible to achieve the goal of American home ownership, because American home ownership is not just home ownership. It is, in fact, in the eyes of so many Americans, the American dream. If we're going to close the wealth gap that we talk so much about, that is so persistent, one of the ways that you do that is by creating equity, and creating equity really comes from home ownership as much as it does any other place in our economy. So thank you both for being here. If you think about the value of home ownership, consistently, Americans owe somewhere around a little bit more than $12 trillion on their mortgages. Mortgage debt accounts for about 70+% of consumer debt in the United States of America. Not an insignificant amount of money. And yet, the last time we had this hearing was back during the Trump years when Chairman Crapo was the chairman of this committee. So I certainly hope that we have more opportunities to hear from both of you at the same time going forward. The American dream of home ownership is further out of reach today than it was just a few years ago. Despite all the subsidies, all the trillions of dollars we spent over the decades, little has changed. In 1970, home ownership rate in America was 64%. Today, it's 65%. Since the passage of the Fair Housing Act in 1968, the goal was to eliminate housing discrimination. The home ownership rate for African Americans hasn't changed much. 44% today. It just continues to have a very slow growth trajectory. Our housing regulators must testify more often so that we can find ways to deal with the challenges that housing presents to so many Americans. Since President Biden has taken office, mortgage rates have ballooned by 150%. Rents have gone up about 20%. Homelessness is up 12% in a single year, the highest number on record in the history of our country. Despite empty promises from the White House about helping working families, the simple fact is that housing costs under this administration has skyrocketed. I see that at home in South Carolina, and frankly, I see that across the nation as I travel. I see that in families worried about how to make ends meet and watching the dream of home ownership seem to slip further and further and further away. What has become apparent is that this administration's platitudes about affordability and housing has failed to line up with their policies. Reckless spending on progressive wish lists fueled runaway inflation. And now Americans are painfully aware that Bidenomics has not helped them, instead burdening them so much. The mountains of red tape and regulations this administration has put on housing providers are only making the matter so much worse. Additionally, both HUD and FHFA have taken several politicized actions that will unnecessarily increase the costs for families and burden communities. HUD recently imposed rent controls on low-income housing tax credit properties, and FHFA is asking for public comments on policies, including rent control, following direction from the White House. But what do these policies mean in practice? They have the potential to limit the number of people served by these programs and restrict the supply of affordable housing. Decades of research have proven that rent control policies make housing supply and affordability issues worse, not better. But this is the type of backwards logic Americans have come to expect from Joe Biden and Bidenomics. Second, HUD unfortunately joined other federal agencies under this administration in attempting to add climate regulator to the list of the duties. For instance, HUD proposed requiring that all newly constructed subsidized housing be built to increased energy efficiency standards, even though HUD itself admits that lower income households may not be able to afford the added burdens of additional costs. According to the National Association of Home Builders, these new environmental mandates could cost as much as $31,000 to each new home. So at the same time, a family is facing doubling and sometimes tripling food costs. In order to meet the green climate goals, this administration saddles them with an extra $31,000 of additional expenses for a single home. Families in communities like the one I grew up in can't afford new climate costs that increases the cost of housing. Which brings me to my last example. It appears this administration's weak on crime policies have also been embraced by our housing regulators. Last year, HUD proposed a rule encouraging cities applying for federal funds to remove crime-free ordinances, local laws that keep rental communities safe by keeping out convicted criminals. Even worse, HUD proposed a rule last week that will make it easier for criminals to live in HUD-subsidized housing, which risks making communities less safe. We need to reverse course and take a different road when it comes to federal housing policy. That's why I announced housing as one of my top priorities for this year as the ranking member of this committee. And since our first hearing last April, I have focused my efforts on building consensus around the common sense, nonpartisan reforms to all segments of our housing market included in my Road to Housing Act. I continue to urge consideration of my Road to Housing Act, which takes a comprehensive view of federal housing policy and recenters support around families, helping those who are homeless or renting or prepared to buy a house. It is past time to consider my legislation, along with other common sense bipartisan proposals that would include real solutions to tackle housing challenges. I look forward to hearing from both of the witnesses today, and I look forward to having an eager conversation about some of the challenges that so many Americans face as it relates to building on their version of the American dream.
Thanks, Senator Scott. Adrienne Todman, welcome as the Acting Secretary of HUD. She was confirmed as Deputy Secretary in 2021. Prior to her service there, Acting Secretary Todman was CEO of the National Association of Housing and Redevelopment Officials, held multiple roles at the D.C. Housing Authority, and served in several career positions at HUD. Welcome back, Ms. Todman. Nice to see you.
Good to see you. Thank you.
Sandra Thompson was confirmed as Director of FHFA in 2022. Prior to leading that agency, she was the Deputy Director of the Division of Housing Mission and Goals from 2013 to 2021. Prior to joining FHFA, she spent 18 years at FDIC, where she held a number of senior level positions, including Director of the Division of Risk Management and Supervision. Director Thompson, welcome back. Madam Acting Secretary, welcome.
Thank you. Chairperson Brown, Ranking Member Scott, and distinguished members of the Senate Banking Committee, thank you for the opportunity to testify today on how the Department of Housing and Urban Development is executing on our mission. And I want to thank the over 8,000 HUD employees across the country who are helping us carry out that mission. First, let me say that the support of this committee is critical to ensuring that the American people have access to housing that they can afford in communities that are strong and resilient. So thank you for your continued efforts to lead and legislate on these issues. As you are aware, this is my 4th week serving as acting secretary. We are grateful for Secretary Fudge's extraordinary stewardship of the department during the last 3 years. Her North Star was ensuring that we centered our work on the people, and that star still shines brightly. Under the leadership of President Biden and Vice President Harris, HUD has made historic strides to improve outcomes for the people we serve. We have provided historic levels of rental assistance, expanded opportunities for homeownership, supported the creation of affordable homes to rent and to buy, supported resilient communities, worked to root out housing discrimination, and helped people who don't make a lot of money just get a fair shot. HUD's work and our resources are having a tremendous impact on people in every community, from big cities and small towns to rural areas and tribal nations. There were more apartments under construction in 2023 than in any year on record, and we are working to build even more. HUD helps over 4 million households annually through our rental assistance programs. Under this administration, we have implemented a number of historic changes to ensure we serve more families and that we support more choice in today's market. In fact, in the past 3 years, HUD has provided families with 120,000 new incremental vouchers, and that's a 20-year record. Actions we have taken to promote homeownership and wealth building has resulted in a higher rate of first-time homebuyers than we have seen in the last 2 decades. Through FHA, we have supported nearly 1.8 million homeowners with purchase mortgages, including 1.5 million first-time homebuyers. Last year, we awarded the first ever package of resources to specifically reach people experiencing homelessness in unsheltered settings and in rural communities. And we have taken seriously our charge to protect all people facing housing discrimination. With resources from the Inflation Reduction Act, we have provided communities with $500 million so far to achieve energy efficiency and climate resiliency in our multifamily portfolio. And by doing so, we are also making much-needed repairs to units across the country. We have pulled together practitioners, experts, and thought leaders who are innovating and executing and researching new solutions. We've improved our hiring, and we've focused on executing on our IT and procurement goals. And we have had 4 clean audits in a row, and I'm particularly proud of this. I'm grateful for the work of this committee and the members of Congress who have worked to make resources available to us so we can carry out our very important work. We have made strides, but we acknowledge that there is more work to be done. As we look ahead, we recognize that HUD's mission is critical for the moms and dads who are still trying to make ends meet. It is critical for young families trying to buy their first home. It is critical for the people who may have lost a job and lost their home and are now unhoused and just need our help. It is critical to ensuring repairs are made in public housing to remove health hazards in any home and for preventing and remedying the impacts of discrimination. Senators, over the past 2 years, the executive branch has been executing on our Housing Supply Action Plan. It's an outcome-based collaborative effort across federal agencies and work that I am proud of. Housing is a priority for the Biden-Harris administration, and the president has put forward a vision that builds on our existing body of work, and HUD is prepared to do our part. Chairperson Brown, Ranking Member Scott, and distinguished members of the committee, I look forward to working with you. Thank you. I look forward to your questions.
Thank you, Madam Secretary. Director Thompson, welcome.
Great. Chairman Brown, Ranking Member Scott, and distinguished members of the committee, I'm pleased to be with you today to discuss the work and priorities of the Federal Housing Finance Agency and the operations and activities of our regulated entities Fannie Mae, Freddie Mac, and the Federal Home Loan Banks. Both renters and homebuyers face challenges in today's housing market. Inadequate housing supply, 4 years of strong home price growth, and elevated interest rates have contributed to a challenging environment for housing affordability. Homebuyers and renters alike face difficulties in finding a place they can afford to live. While housing affordability represents a national problem, the impact is most acutely felt in local communities. I've heard about these issues from working families in cities such as Philadelphia, Louisville, and Las Vegas, as well as in more rural areas in states such as Nebraska and Tennessee. I've heard about the need for more workforce housing, which enables teachers, first responders, construction workers, and municipal employees to live in the communities they serve. I've also heard about dual-income renter households that cannot build the savings for the down payment and closing costs on a home purchase. And I've heard about multi-generational families living in homes that are far too small just to make ends meet. While much of the ongoing discussion about housing affordability focuses on a consumer's monthly payments, closing costs also represent a substantial barrier to purchasing or refinancing a home. Recently, FHFA and the enterprises have been engaged in efforts to explore sustainable measures to reduce mortgage closing costs for both current and aspiring homeowners. Earlier this year, FHFA approved a title acceptance pilot as one component of that broader effort. This pilot seeks to evaluate whether technological advances and the electronic availability of real estate records can result in lower costs for borrowers who just want to refinance their mortgage. They already own their homes and will continue to reside in them. Appraisals are another important area in which the enterprises are taking steps to reduce costs for borrowers without compromising safety and soundness. The enterprises and the industry have developed several alternatives to traditional appraisals that address appraiser capacity, valuation changes, and shorten the process while promoting fair, equitable, and accurate appraisals. The equitable housing finance plans produced by Fannie Mae and Freddie Mac are another critical component of their mission-driven activities. Through initiatives developed under their plans, the enterprises supported almost 2 million families in their home ownership journey last year. Some of these initiatives include down payment assistance programs and the use of positive rental payment data for renters to establish or improve their credit scores. FHFA's oversight of the Federal Home Loan Bank system featured an important milestone last November, when the agency released a report following a year-long comprehensive review of the system. The report included 40 recommendations based on extensive engagement with stakeholders across the country, designed to ensure that the banks effectively fulfill the core objective of their mission, providing stable and reliable liquidity to their members and supporting housing and community development. A series of reforms will be implemented to ensure the banks remain well-positioned to meet the needs of their members and the communities they serve. The priorities I've outlined today represent just a portion of FHFA's ongoing work to ensure its regulated entities meet their missions in a safe and sound manner. These actions, along with others outlined in my prepared statement, align with FHFA's mandate from Congress. In my 30 years as a financial regulator, I've long believed that safety and soundness and access to credit are not mutually exclusive, but instead complementary. Broad, fair access and the stability of financial institutions work together as pillars of the nation's housing finance system. Thank you again for the opportunity to appear before you today. I look forward to working with members of this committee to find effective solutions to the challenges of housing supply and affordability.
Thank you, Director. I will begin the questions with Senator Tester.
Thank you, Mr. Chairman, for holding this hearing, and the ranking member also, and thank you for your courtesy. I want to express my appreciation to the two panelists. Acting Secretary Todman, I want to talk about an issue that I've talked to your folks before. I've talked about it in this hearing. It is a longstanding problem that is getting worse, not better. It has to do with HUD's fair market rents, HUD's fair market rents that have not kept up with the rapid rise of housing prices in Montana. They do not reflect the reality of housing costs in communities across our state, and they're not being revised in a timely manner. You're taking away vouchers from housing authorities with long waiting lists because there simply aren't any units available to be able to use those vouchers with. How your agency is handling this now is not working, okay? I know this is a problem HUD knows about, but the changes that you're making to incorporate rents from corporate landlords are not going to help us in Montana at all. Right now, these programs are not able to serve the folks in Montana that they are meant for, and I think it's incredibly important that the folks at HUD step up and fix these FMRs. This program is going to end up leaving rural America behind. So what more needs to happen so that these rates reflect the actual rents that we have in Montana communities that folks can access, so that folks can access these housing resources?
No, thank you, Senator, for raising this issue. As you and your team is probably aware, fair market rents are established by HUD and updated yearly, so we can keep up with what's happening in the market. And a couple of years ago, we did introduce private data into our calculations there because we had received lots of concerns that the data we were relying on, the agency was relying on, was not really keeping up with what the market was showing. And so I'm happy to sit down with you, your team, and the housing agencies in Montana to learn more about how our current methodology for FMRs may not be working, particularly for the voucher program, and look forward to talking with you more about that.
When is the next time the rents will be assessed and potentially moved up?
It's reestablished every year, so it should be about fall of this year.
Fall of this year?
That's correct.
Okay, and I appreciate the offer to work with me on what's going on in Montana. I can just tell you that Great Falls is the closest major city to where I live.
Okay.
It's not the fastest growing city in Montana by any stretch of the imagination. It's not under the economic pressures that there are. They can't use vouchers. Okay. Just simply don't work. And so I would love to have you address this before fall of this year, because that's 6 months from now. But so if there's ways you can speed that up or amend or however you can do it, I would appreciate it if you'd let us know, because we're here to help, okay? If
I can add, Senator, I'm also happy to have our teammates in the Office of Public and Indian Housing sit down with the housing agencies to talk about flexibilities that they may have in terms of using their vouchers in the interim.
That's good. This is a problem where we've got a program that was set up and it just doesn't work.
I understand.
Okay. Another question here. Our housing authorities in Montana have another challenge related to the FMR issue. I'm concerned that two problems together will worsen until Montana communities are left with few housing vouchers and few resources to get folks into home. You correct me if I'm wrong, but we are told on the ground in Montana that last year HUD took $4.5 million in housing choice voucher funds from reserve authorities, reserve funds from housing authorities across Montana. And now you're telling them that they're at risk of a shortfall. I could have a lot of fun with this question, trust me. But if that's true, if reserve funds were took, and then a short time later we're saying, guess what, folks, you got a shortfall, it doesn't take a nuclear physicist to figure out why that happened, okay? So could you tell me what happened, number one? And number two, if there is a problem, you commit with working with our folks in Montana to solve that problem?
Well, I'll commit at the top and say always happy to work with the housing agencies on Montana, who I call former colleagues. And I'll also share that I'll have to take a look at the reserve poll and then the request to use shortfall. You're correct, that doesn't seem to make a lot of sense, but I will promise to work with you and the agencies there so we can correct.
Thank you very much, and I'll have a question for the record for you, Ms.
Thanks, Senator. Senator Scott's recognized.
Thank you, Mr. Chairman. One of the successes of the 2017 Tax Cuts and Jobs Act was the legislation that I put in there, the opportunity zones. And one of the reasons why it's been so successful is whether you're a Democrat mayor or a Republican governor, they both agree that attracting more housing opportunities into inner cities of their communities is critical. I think of the event that I attended with Democrat Mayor Geddes in South Carolina, where he said that the first time in almost 30 years that he has a chance to build homes within his city, the downtown area of his city, is because of the opportunity zone. So we still see real opportunities. We note that last year, OZs represented the largest spike in apartment complexes being built in our country, leading to more accessible housing. You don't own it, but certainly you can live in it in our country. I think most of us would agree that the largest issue impacting the housing market is a lack of supply, especially for affordable homes. My Road to Housing Act includes a number of solutions that aim to increase supply as well as preserve affordable units that already exists. Specifically, my legislation makes crucial changes to the rental assistance demonstration program by eliminating the cap on the number of public housing units that can be converted under the program. This would create more opportunities for private capital to help rebuild our nation's aging affordable housing. Question for you, Acting Secretary Todman. You previously testified that the RAD program has been a critical tool to help recapitalize the public housing infrastructure backlog. You also said that housing authorities must explore private-driven solutions to preserve these units. Do you still agree with your statement, and do you support lifting the cap on how many units may participate in and be preserved through RAD? Yes, ma'am.
Thank you, Senator. You know, one of the things that we've seen with the advent of the rental assistance demonstration program is a number of repairs being made to public housing units across the country, and I think we all welcome that. I've also heard from some of our local and national advocates about their concerns around tenant protections tied to this conversion to RAD. And so I think that we are really excited and pleased at the repair work that's been done and how the program has really turned the tide in terms of underinvestment in a really critical portfolio that houses some of our lowest income families. But I would also want to make sure that we're making sure that those lowest income families are being protected as the program grows. So I'm happy to talk to you more about what an expansion looks like, but certainly want to make sure we're marrying what we're seeing with what we're hearing on the ground.
You also previously testified that you were deeply supportive of Congress's efforts to expand the Moving to Work demonstration program. Do you still agree with your statement, and do you support my legislation authorizing the program?
So Moving to Work is another place where we've seen a number of innovations that without the flexibilities afforded these agencies, we probably would not have been able to adopt across the portfolio. Just a couple weeks ago, I was in Boulder County, so we could celebrate the establishment of the last of the 100 agencies that Congress allowed as an expansion to Moving to Work. You might recall there are 39, and Congress authorized us to expand it to another 100. So we've added our last 14 agencies to the Moving to Work Club, and we look forward to their work. I will say that Moving to Work has been critical with really looking at ways that we can continue to house residents safely. We have seen housing production. We have seen new forms of services. We have seen even ways that agencies are reducing their administrative costs, which I think is something that we all would want. And so I'm completely support Moving to Work as it continues to be a source of innovation across the housing industry.
I only have about 50 seconds left, and I'll have to see Ms. Thompson next time. So another question for you on homelessness. I know that we appreciate Secretary Fudge's service to the country. Are there any proposals that were not implemented that you would like to implement, or do you have any new ideas to help expand the opportunities for our homeless population? We saw the greatest spike in homelessness over the last 12 months, basically. Any thoughts on how we can combat homelessness?
Yeah, I think that, there's lots of thoughts on how to combat homelessness. I think one of them is continuing to work with the folks on the front line to make sure that they're using our existing funds effectively, but quite frankly, making sure that we have the type of rental assistance and preservation tools we need to try to prevent homelessness to begin with. We were pleased just a couple months ago to give localities about $3.1 billion in resources, the highest amount ever, to our continuums of care across the country, so they could continue to do the good work that they do. And we're really pleased at the additional vouchers that Congress provided us, because we know we've been able to stabilize over 120,000 families across the country. And so we look for that as a tool of intervention as well.
10 seconds here. Thank you. Director Thompson, I know that you'll spend some time in South Carolina coming up soon, and Acting Secretary, I'd love for you all to spend some time in Columbia, South Carolina. I know Columbia is spending some time working on new ways to combat homelessness. I met with their mayor yesterday, and they're spending a lot of time in investing some resources on ways to do so. We'd love to have your expertise weigh in on that, so it's an open invitation to both of you to spend some time in Columbia, South Carolina. Thank you both.
Looking forward to it.
Yes,
Thanks,
ma'am.
Senator Scott. Senator Butler, who's been called to preside, and Senator Smith, thank you for ceding your time for a moment. Senator Butler.
Thank you, Mr. Chair, and thank you to Senator Smith. I appreciate the Chair and Ranking Member for holding today's hearing, and want to join my colleagues in honoring the service of Secretary Fudge and her time in the role. And you all are taking on and continuing leadership in an important moment for the American people relative to housing affordability, and achieving that thing that we call the American dream, the ability to sort of pass on generational wealth across families. Director Thompson, thank you so much for the previous conversation, and I want to sort of pick up where we left off. The analysis conducted by Moody's estimates that the U.S. economic losses from the recent California flooding at about $5 to $7 billion. Last week, the insurer with the largest market share in California announced it would not renew the homeowners, rental dwelling, and other property insurance policies of 30,000 Californians, leaving them financially on the hook for millions or even billions of dollars in the event of future climate disasters. And I know that it's not just California, but Louisiana, Texas, Florida are also facing challenges in their property insurance markets. In our conversation, you mentioned that FHFA does not receive notice about insurers withdrawing from insurance markets and the downstream effects that this can have. Could you elaborate on these withdrawals' impacts of homeowners, future homeowners, not just in California, but across the country?
Sure, thank you for the question. Property insurance is a requirement, property and casualty insurance is a requirement for any loan that's purchased by Fannie Mae or Freddie Mac, and they have to have that in order for Fannie and Freddie to purchase them. And when property carriers withdraw from large populations, it's very difficult, especially for first-time home buyers, to purchase a home and then have to search for a policy to adhere to the requirement that we have that they purchase the loan. You know, it's interesting because we're starting to see a lot of natural disasters, and the collateral that FHFA is responsible for, we've got about $8.4 trillion outstanding in mortgage collateral. So these natural disasters impact us greatly. So we've got multifamily properties and residential properties. And so when there is something that happens, it impacts the valuation of our property. From an insurance perspective, we're starting to see a number of climate issues or natural disasters take place. There used to be about 3 issues per year that were costing over $1 billion. And now, just last year, there were about 28 different issues that cost over $1 billion each. And so the impact on our portfolio, where our only asset is mortgage collateral, either a house or an apartment, is just phenomenal. We would really like to work with the mortgage industry to address this issue. What we're finding is that premiums are going up and borrowers are not being able to afford some of their monthly payments with little or no notice. And so we're also seeing a reliance on state plans for insurance, whether it's flood or otherwise, that we really want to address as we try to deal with the cost of just owning a mortgage. We've been actually working with the insurance commissioners in some of the states that have lots of natural disasters, California, Florida, Louisiana, Rhode Island. We've been working with the NAIC to try to address this very important issue.
And to that point, just really quickly, with my last 50 seconds, I do want to just offer either or both of you, Ms. Todman, Secretary Todman, I'd offer you the opportunity first, but just to talk about what steps can we collectively, HUD and FHFA, take to, in the near term, at least to develop a framework for protecting consumers in the event of these natural disasters and insurance provider withdrawals.
Well, I'm happy to pick up where the director left off. You know, as you know, HUD has limited authorities as it relates to the insurance industry, but what we have done is we've convened an internal working group to look at, with the authorities we have, how can we help consumers? How can we help some of those housing owners who's saying that they're having increased operating costs because of outrageous insurance increases? And so as soon as this week, you'll be hearing HUD announce some of the things that we can do, and there's a whole body of work that we'll be rolling out, including engaging with the insurance industry so they can understand the impact on housing affordability.
Senator Rounds of South Dakota is recognized.
Thank you, Mr. Chairman. And just in a follow-up to Senator Butler's questioning, I think a lot of the challenge, and it's not just in homeowners, it's in a lot of the other areas where insurance is finding that if you're making property and casualty repairs, because of supply chain issues, the costs of making those repairs have exploded and the time delays have really added to the cost, and that's being borne by an insurance industry that is seeing significant costs for those specific items, and it's driving premiums up because of it. So. Secretary Todman, I'm thinking out loud about the way to phrase this question to you. We're trying to cut costs wherever we can with regard to the bureaucratic costs of providing home ownership and so forth. There was a discussion most recently that we did at a roundtable in which we were talking about some of the unneeded paper trails that are required right now. And I'd like to just read a format for you, and you may very well want to take this for the record, but I really think it's one that we could very efficiently and simply maybe cut some costs and some red tape for some folks. We're all discussing housing affordability, but there has been little action on streamlining programs, requirements, and federal regulations. Removing unnecessary program requirements would be a great place to start. I'd like to discuss the environmental review process. The National Environmental Policy Act, or NEPA, requires agencies to consider the environmental effects of any proposed action and inform the public regarding their decisions. As you know, the agency carrying out the federal action may create their own NEPA procedures. Under HUD regulations, grantees must complete the environmental review process and maintain a written record of the environmental review for every project before decisions are made and actions are taken. This requirement includes the use of Community Development Block Grants, CDBG funding, for grantee administrative expenses. Secretary Todman, can you tell me why, when a federal program specifically allows a portion of the funds to be utilized for administrative expenses, HUD requires the grantee to go through the bureaucratic process of actually conducting the review and creating a written record of that determination? It really does look like some low-hanging fruit that could be fairly easily eliminated. Would you, and maybe you know about it right now, and if not, would you take it for the record and get back to me?
Senator, I accept your invitation to take it for the record. I would just add that environmental reviews, of course, are something that is important as we're carrying out our work.
Probably not with regard to just doing administrative expenses.
Well, I accept your invitation to respond on the record, and certainly we'll ask our staff to take a look at this with you.
Thank you. Director Thompson, in 2022, during your confirmation, we had a very good discussion about credit transfers, GSEs, I asked you about ways that we could incentivize the GSEs to create credit risk transfers. I strongly support credit risk transfer at the enterprise, Fannie and Freddie, as a way to protect taxpayers. And you agreed, made it very clear that you felt the same way. But in 2023, the enterprises posted the second lowest credit risk transfer in the history of the program, and Freddie posted the single lowest amount of credit risk transfer ever. Now, Director Thompson, I know that you, because we've talked about this, you understand what a valuable tool that is, but I just can't figure out what's contributing to the trend that's going on there. Can you help us with that?
Sure. Thank you for the question, Senator Rounds, and I appreciate the opportunity to talk about credit risk transfer because we think that's a huge component of shifting credit risk to private investors and off the balance sheets of Fannie and Freddie. The reason that the credit risk transfers were so low in 2023 is that they're based on the loans that are purchased by Fannie and Freddie. And you'll remember in 2020 and 2021, we were faced with historic interest rates, record lows, I should say. And the acquisitions for Fannie and Freddie were at record highs. Those were the two largest years of loan purchases ever for both Fannie and Freddie. The interest rate environment really stifled the acquisitions of loans from Fannie and Freddie in 2023. They went from record highs to very low. So again, their credit risk transfer is really based on the amount of loans that they purchase. But we encourage them to utilize credit risk transfers. They've been very innovative in this space, and it is really a measure for safety and soundness, which is of paramount importance to us.
Well, thank you. And I just, it appears that probably even for these folks, a lot of these folks that don't have another place to go to get a loan, we're seeing right now that these high interest rates are impacting this segment of the population rather dramatically, aren't we?
Absolutely, yes.
Thank you. Thank you, Mr. Chairman.
Thanks, Senator Rounds. Senator Menendez from New Jersey is recognized.
Acting Secretary Todman, I hope that you have been made aware of the deplorable conditions residents of properties under the management of the Atlantic City Housing Authority have been subjected to. Residents have been complaining about issues including water and gas leaks, pest infestation, mold, broken appliances, and much more. Some residents even lack heat and hot water all throughout the past winter, and these issues have been ongoing for years. In addition, the authority itself is rife with management problems, including issues with its procurement and contracting procedures that have delayed critical fixes to units. In February, residents of Stanley Homes were instructed to relocate to a hotel with no cooking devices, no accommodations for their pets, and at least one instance, no accommodation for a resident's disability. Many of these residents have still not been able to return to their homes. I know that HUD is aware of these issues because last year, HUD's Principal Deputy Assistant Secretary for Public and Indian Housing described an audit of the Atlantic City Housing Authority as, quote, one of the worst audits that I have ever read in my life. Your staff has briefed mine on the recovery and action plan HUD has developed for the Housing Authority to fix these issues. However, a plan is not enough for these residents who have been living in inhumane conditions for so long, especially when the plan is being executed by the same authority that has allowed these issues to fester for years, all the while ignoring or retaliating against residents who spoke out about the problems they were facing. The Atlantic City Housing Authority has lost the trust of the residents it was created to serve. And that is why I sent a letter to your predecessor in December calling on HUD to exercise its authority to immediately place the Atlantic City Housing Authority into receivership and rapidly working to bring relief to the residents. Today, I'm reiterating that call. So, Madam Secretary, will you commit to personally reviewing this situation and getting back to me with what you plan to do to accelerate relief for the residents of Atlantic City?
Certainly, Senator. I'm aware of this issue. And in fact, I also directed the senior leadership of our Office of Public and Indian Housing to take more urgent action. We are working with the leadership at the Atlantic City Housing Authority. What you've described is horrific, and no person, particularly the residents of public housing, should be experiencing that.
Well, I look forward to be honest with you, something more to that. I view that HUD must immediately take over the Atlantic City Housing Authority to ensure the safety and dignity of its residents. And every day that we allowed the authority that allowed all this to happen to affect the lives of its residents the way it has is a day that it becomes HUD's problem, more so than the Atlantic City Housing Authority. So I look forward to you get back to me exactly what is your plan of action here.
I commit to doing so.
Thank you. Madam Secretary, I was puzzled to see that the President's budget request for FY25 called for $143 million less than the FY24 enacted level for Section 202 housing. Do you believe that HUD's budget request accurately reflects trends in the market for senior rental housing?
Senator, as you may know, the HUD and the administration are working under the constraints of the Fiscal Responsibility Act. And so it was difficult decisions to be made. We think we've put forward a budget that is considers that agreement, but also prioritizes where we know there's need.
Well, all I know is that the nation is graying pretty dramatically. Those who are boomers are grayers. And at the end of the day, if we invest less in the supply of senior housing while demand is skyrocketing, I'm not sure what that will do in the marketplace. So I urge you to relook at that. Finally, Secretary Thompson, actually, it's Secretary Todd. I understand that HUD is working on updates to energy efficiency and other construction standards for manufactured homes. And I understand that while HUD has primary statutory responsibility for regulating manufactured housing, the Department of Energy has been working in parallel on their own energy efficiency updates. Can you share with us an update on your work on this issue?
Right, so the Department of Energy was compelled, I believe, by legislation to carry out its work. HUD does have a draft rule. I'm therefore limited in what I can say about the draft rule, but I do know that we are trying to marry the pressing need of energy efficiency along with housing affordability. And we've been working with our colleagues at Department of Energy to do that.
Well, we have huge housing affordability across the country, New Jersey for sure, where people spend more of their disposable income on housing than they should. And I would hope that this is something that can be accelerated because I think this is part of our answer. Thank you, Mr. Chairman.
Thank you, Senator.
Senator Haggerty, I assume I see Senator Tillis has yielded to you. Senator Haggerty of Tennessee.
Thank you, Senator Tillis. Thank you. And I love the fact that your mom and your brother still live there. Director Thompson, I'd like to direct this to you. You've testified that in order to end conservatorship of Fannie Mae and Freddie Mac, two things need to happen. First, we've got to build capital through retained earnings before ending the government's 15-year-long conservatorship. And second, you've said that Congress needs to decide the future of these two government-sponsored entities and the U.S. mortgage finance system more broadly. On the first point, the quickest way to end the GSE conservatorships is to raise private capital, just as bailed-out banks were allowed to do in the wake of the 2008 financial crisis. Now that the GSEs control so much of the housing market, there seems to be a reluctance to relinquish government control. I ask myself why. Well, judging by the redistributive housing policies that have been pursued at the helm, while you've been at the helm of FHA, it seems that the GSEs are viewed by the Biden administration as simply backdoors to push its DEI social policy agenda, which is well beyond your mandate. On the second point, Congress has already decided what type of mortgage finance system it wanted with the 2008 HERA law. That law significantly enhanced the regulatory and supervisory powers of your agency over Fannie Mae, Freddie Mac, and the federal home loan banks. The problem here is that the Obama and Biden administrations have never taken their feet off the throats of Fannie Mae and Freddie Mac so that they can succeed as private companies. The responsible thing to do for yourself, for Secretary Yellen, and for Attorney General Garland is to continue the work that was begun by former FHFA Director Calabria to raise private capital and return Fannie Mae and Freddie Mac to the private markets. This would result in a $100 billion plus windfall for taxpayers, and it could be used to immediately help expand the country's housing supply and support affordable housing for Americans who are most in need. We talked about this at the time of your confirmation to be the agency head. And our housing markets and American taxpayers deserve to see these conservatorships brought to an end. And I appreciate your full attention to this in the time you have remaining as director. Thank you. Thank you, Mr. Chairman.
Thanks, Senator Hagerty. Senator Smith of Minnesota has re-arrived and been kind and yielding.
Thank you so much. Thank you so much, Chair Brown, and thank you to both of you for being with us today. I really appreciate it. Oh, thank you. So everybody, we know, I think we're all here today because we believe that everybody deserves a safe, affordable place to call home. And we also acknowledge, all of us, that for far too many families, this is out of reach. And I'm very grateful to the Biden administration and to Chair Brown for his leadership, really bringing attention to finding solutions to these challenges. And of course, housing is incredibly complex and nuanced. It's much driven by the private sector and also much driven by local decision-making when it comes to zoning, for example. But I think that we could all agree that we need to focus on boosting housing supply and also on preserving the housing stock that we have. Chair Brown, we had a very interesting hearing in my subcommittee just earlier this week where that really highlighted the need to preserve the housing stock that we have. So Secretary Todman, my question is for you. Could you just highlight for us how the department has been working on this issue of housing supply, especially in the housing for middle-income people who are working in low-wage jobs also?
Absolutely. Thank you, Senator, for the question and for your leadership on these issues as well. So HUD has been very busy over the past 3 years, not just carrying out its own work, making sure that we are executing on the new vouchers that we've received, making sure that we are modernizing our rules, like the home rule, which I know so many people locally lean on to make sure we're building to low and moderate income family needs. But we've also been working collaboratively with our sister agencies, with Treasury, on our new federal financing bank risk sharing and removing sort of the deadline that was tied to that initiative so that more HFAs can help support affordability development, and also just working with our colleagues at Treasury on the State and Local Fiscal Recovery Act and repurposing those funds for gap financing for really critically capital needs on the ground. So we have been busy, and we think that with the umbrella of the President's Housing Supply Action Plan, we've been acting as one government to just drive this issue.
The administration has made some new proposals to help expand housing supply, and particularly the Innovation Fund for Housing Expansion. Could you talk a bit about how that proposal could help empower local solutions to increase housing supply?
No, thank you. And I think you're referring to, in the President's budget for 2025, the $20 billion Innovation Fund. Well, it's just that. We want to make sure that we are including gap financing, that we're helping folks with thinking through some of their pro-housing work. We're very excited to have our new pro-housing program, and we'll be rolling out some of the recipients of that sometime this spring. It is meant to be a program that is really meeting localities where they are and inspiring them to be able to create their local solutions to build housing and certainly to preserve the housing that they have.
Thank you. I also want to talk with you about, you and I have had quite a few conversations about issues around tribal and Native housing. I know this is something that Senator Cortez Masto and Senator Warren also pay very important attention to. We know that there are significantly high rates of homelessness and overcrowding, which is really almost a bigger problem because as people, more than one family crowd into shelter that is just not nearly large enough for them, and also just the issue of substandard housing. Senator Lummis and I held a subcommittee hearing on this last year, and we've been working with the administration on how we can respect tribal sovereignty and partner with tribes as we work on these housing issues. Could you just talk a bit about how the department is addressing this issue?
Yeah. You'll be happy to hear that since I took on the job as Deputy Secretary, I've been in robust conversation with tribal nation leaders about what their needs are. And I've heard an earful, as you can imagine. One of the things that we have been doing, in addition to deploying the historic levels of funds that Congress has given us to help on housing and community development, is really working with tribes on how they are able to use that money swiftly. In addition to that, we've created a new advisory committee in the department for tribal leaders, and we've had 2 meetings. We're going to have another one shortly. And there we have consistently looked to the leaders of the tribal nations to tell us what can we be doing better in true respect of our government-to-government relationship. Those conversations continue, and I've been working personally with some of the leaders on ways that HUD can cut some of the red tape to make sure that we're helping them deliver.
Thank you. Thank you so much for both of your work on these really important issues. Thank you, Chair Brown.
Thank you, Senator.
Thank you, Senator Smith. Senator Tillis from North Carolina.
Thank you, Mr. Chair, and thank you both for being here. Director Thompson, last year, FHFA directed Fannie and Freddie to make changes to the loan level pricing adjustment matrix. You've said these updates were intended to allow the GSEs to further build capital and reduce taxpayer risk. I'm just trying to get my head around this. These changes functionally reduce aspects of LLPA's risk-based pricing relationship in common with loan-to-value strata. They seem to be providing a decrease in rates applied to higher risk persons and increasing it to lower risk persons. Did I get that right, or what am I missing?
So thank you for the opportunity, Senator, to clarify the misunderstanding that permeated all of last year about some of the pricing changes that Fannie and Freddie undertook. We have been working diligently to ensure that Fannie and Freddie are doing what they can to fulfill their mission. 1, safety and soundness. 2, making sure that they're fulfilling their mission in terms of facilitating loans to underserved communities. We eliminated the loan level price adjustment or fee, the upfront fee for all borrowers across the country, for borrowers that had area median incomes of 100% or less. I can assure you that all of the changes that we made do not result in borrowers with high credit scores subsidizing borrowers with low credit scores. We continue to have risk-based pricing. What happened in the discussion was when you have a loan to value that is 80% or higher, you have to purchase credit enhancement, usually in the form of mortgage insurance. And we don't add that into the calculation, but it's still risk-based pricing at the end of the day. And I can assure you that risk-based pricing exists at Fannie and Freddie, and there are provisions to make sure that lower income borrowers and borrowers in rural communities across this country don't have to pay upfront fees.
Well, this can be a very complicated discussion. Yeah. It's hard to simplify it into 5 minutes, but I'm going to submit this matrix for the record and then have you, can I get your commitment to respond back to a very specific set of questions that we'll ask on this? Because the thing that I'm still trying to get my head around, if a part of this decision was used as a basis for raising capital, then where is that capital coming? Where is it coming from?
So the chart that you have reflects a number of changes that the enterprises undertook. 1, we increased prices on super jumbo loans, so loans that were over the conforming loan limit. That was one of the first changes we made. We also increased prices for...
What drove that decision?
What drove that decision was the conforming loan limit in some of the counties was well over 7 digits. Mm-hmm. That's what drove, and there's a private market that exists to purchase those jumbo mortgages. And so to the extent that the enterprises are purchasing those loans, that people need to be able to pay the additional fees for those loans. Yeah. The other thing that we did was...
So are you saying that the policies that have been implemented over the last year, in your opinion, and the fees associated with them were driven by actuarial decisions where you're rating for risk in every case?
Oh, absolutely. We're rating for risk, and we're also looking at the capital requirements for every single loan that we purchase. We've also raised fees for second homes and vacation homes.
So the reduction in fees for people with higher risk ratings were because they were being overcharged at the time?
They were overcharged because we were not capturing the mortgage insurance that they have to pay. It's mandatory. So when you have that chart, I'm going to draw a line for the loans that are 80% LTV and above, and I'm going to add fees for those
Okay,
loans.
we'll get
makes
in.
the risk
I've got
based.
a long series of questions. I
We're happy to
appreciate your commitment
respond.
to answering them because I really want to get to the fact. I will say that we did reach out, try to get a consultation and see if your imposition of this was in violation of the APA. It should have been subject to rulemaking. We found out that because we were going to try and force that issue, but apparently you're given latitude in the conservatorship model and the conservatorship that you're operating within now. But it is beginning to make me wonder whether or not we should more tailor what authorities you have within your role as conservator versus some of these policy decisions. But thank you for being here. Thank you both for being here. I'm going to submit some questions for the record around manufactured housing and clearing the backlog as well. Thank you, Ms. Todman. Thank you all. Thank you, Mr. Chairman.
Senator Warren of Massachusetts is recognized.
Thank you, Mr. Chairman. So in 1932, Congress created the Federal Home Loan Bank system to tackle the biggest housing crisis of the last century, the Great Depression. And the basic idea was simple. The federal government offered help in the form of an implied government guarantee, favorable regulatory treatment, and special tax status. And then in return, the FHLBs would provide liquidity to their members to support housing and community development. Today, we are in the middle of another housing crisis. By some estimates, we are short 7 million housing units nationwide. But in this critical moment, the FHLBs are missing in action on their affordable housing mission. Last month, the Congressional Budget Office released a report that, for the first time, put a number on how much the FHLBs receive in public subsidies. In fiscal year 2024 alone, that number was a whopping $7.3 billion. Director Thompson, in 2023, how much of these public subsidies did the FHLB spend on affordable housing programs?
I think it was approximately $390 million. I think $350
Okay,
was
$390 million. So that means the vast majority of the subsidies the federal government poured into the FHLBs went somewhere other than to affordable housing. Only a tiny fraction went to affordable housing. So where did the taxpayer money go? Director Thompson, in that same year, how much did the FHLBs spend on dividends for their members, like banks and insurance companies?
approximately 3.4 trillion.
Billion.
Billion.
God.
I'm sorry, B.
Bad
with a B.
enough. Okay.
Yeah.
All right. So just so we're clear here, the FHLBs spent 8.5 times as much on dividends to their members than they did on affordable housing. I think that's right. Just the math here. But not all of those federal dollars, those taxpayer dollars, went to dividends. There's still some money left over. According to the GAO, the FHLBs lent tens of billions of dollars to prop up Silicon Valley Bank, Signature Bank, and First Republic Bank before they failed. Director Thompson, FHFA is the primary regulator for the FHLBs. Do you agree that it is important for the FHFA to clarify that the mission of the FHLBs is to provide liquidity for housing and community development, not simply to prop up failing banks and hand out dividends?
Absolutely. Thank you for the question, Senator. We conducted a year-long review of the home loan bank system. We conducted 17 listening sessions around the country, and we heard exactly that the home loan banks they have a dual mission. One is to provide stability and liquidity to their members, but the other is to support the communities that they live in through affordable housing development and community development. And there is a huge affordability issue. There are huge supply issues. And the home loan banks are well positioned to do a lot more. And that's one of our recommendations from our report.
And I appreciate that. It's not enough to be well-positioned if they are taking the money and then not spending it to accomplish that. So I think clarifying the mission of the FHLBs is an important start. But I think we also need to take a look at who lines up for these federal subsidies. Remember, these government subsidies are to promote housing. But in the last 5 years, 5 full years, 42% of FHLB members did not originate a single mortgage, not one. 42%. So how did this happen? Well, it turns out, under the current rules, members only need to hold at least 10% of their assets in residential mortgage loans at the time they apply to join a FHLB. Once you're in, you're in. And you can get out of the housing finance business while you take advantage of these government subsidies. Director Thompson, should the FHFA change the rules so that members must hold at least 10% of their assets in residential mortgages on an ongoing basis in order to remain eligible for FHLB financing?
That was one of the recommendations in our report. We are going to promulgate rulemaking sometime this year to talk about membership, one, to define what the role is of membership, and to also ask questions about what that threshold should be, because you will have a situation like one of the 3 bank failures where you start out with the 10% to meet the requirement, and then the bank's business model changes, and there's no ongoing checks for them to access the home loan bank system. So that is rulemaking. It'll be very transparent, and we're looking forward to engaging in that discussion.
Well, I strongly urge the FHFA to issue its proposed rulemakings to address the FHLB's mission and membership as soon as possible. The FHLB should be tackling our nation's housing crisis, not doling out corporate welfare to these giant banks and to members that aren't even in the housing business. Thank you. Thank you, Mr. Chairman.
Senator Vance of Ohio is recognized.
Thank you, Mr. Chairman, and thank you to the 2 witnesses for being here with us today. I want to just direct my questions to Director Thompson. And Director Thompson, one of the biases that I have, and I think it's hopefully a bias shared by everybody who serves in this body, is that we shouldn't be discriminating in our country based on race. We should treat people based on their individual characteristics and not dole out government benefits, favors, or consequences because people have the wrong skin color. And I assume that you share that conviction as well. And so I want to point directly to a particular policy of your directorship. So a September 21 announcement followed by an August 2023 proposed rule requiring Fannie and Freddie to, among other things, advance equity in housing finance. And in particular, the way that Fannie has applied this particular directive worries me. So there's a Fannie Mae plan, as I understand it, that is strictly targeted at Black and brown Americans, that explicitly is targeted at Black and brown Americans. Again, I don't think we should be doling out housing favors based on skin color. But I'm curious, one, am I right about that? Does the Fannie Mae plan specifically target Black and brown Americans? And second, does that program have any income requirements?
So thank you for the question. And one, I want to assure you that everything that FHFA and our regulated entities do complies with the law. We have under the Fair Housing Act the responsibility to ensure that there's fair housing access for everyone. When you talk about the affordability issue, which is the biggest issue that our country has today, it didn't miss any communities. And there are particular communities that are underserved, and there are huge housing gaps. And we have asked Fannie Mae and Freddie Mac to come up with plans, not just for underserved communities, and you're specifically talking about the equitable housing finance plans, but rural communities, tribal communities, Native American communities, because we want to make sure that no one's left behind. We can't let the housing market fail, and there's no one size fits all. I would say that many of the barriers that have been identified in some of the plans, especially in the Fannie and Freddie plans for Black and brown borrowers, apply to other cultures as well, and it applies across our nation. I'll give you an example. One of the things that came out of
So Director, just because I'm limited on time, I'm sorry to interrupt, but I just want to sort of, just to specify this a little bit. So as I understand, there's a down payment assistance slush fund that Fannie Mae has applied as part of this particular equitable housing finance plan. My understanding is that Black and brown Americans are eligible for this down payment assistance, but it's not income-based.
Well, our programs are not race-based. The programs that are in the special purpose credit programs is what I think you're referring to. They're location-based, and those are the programs that Fannie and Freddie offer. They do purchase loans from other institutions.
So there is not. This actually makes me feel good if I'm misunderstanding this. So there is not a Fannie Mae down payment assistance program that you can only apply for if you are Black or brown.
There are down payment assistance programs that apply to many Fannie Mae programs, a Home Ready program.
But is there one that discriminates based on race?
No,
you can only apply if you have a specific racial category.
For the enterprise-based special purpose credit programs, you can apply for those programs if you live in a certain area. I think it's location-based, it's not race-based.
But is there any income requirement on that?
I'm not sure. I'd have to get back to you on that.
But I appreciate that because being mindful of my time here, the thing that I guess I find somewhat troubling about this stuff is I certainly agree that there are a lot of Black and brown Americans who've been left behind by the housing market, and we want to sort of guarantee access to the housing market for everybody. But you can accomplish these things very often by targeting at a particular income category. And of course, you're going to catch up a lot of Black and brown Americans. You're also going to catch up a lot of Americans from other racial categories who maybe don't have high income. And it strikes me as a much better way, and also a much less illegal way, to do housing assistance in our country. And targeting it particular racial groups is just not something I think we should be doing.
Well, first I want to say that we're not doing anything illegal, and we do have.
That's good to hear.
Yeah, and
appreciate that.
Would not do that. But we think that these housing programs should be available for everyone. We have them. We have programs based on income, and we've had them for years. And we do have these programs that are based on location that the enterprises are promulgating.
All right, thank you, Director Thompson.
Sure.
Thanks, Mr. Chair.
Thanks, Senator Vance. Senator Van Hollen from Maryland is recognized.
Thank you, Mr. Chairman. Thank both of you for your testimony and your service. A couple questions for both of you related to how we can use programs under each of your jurisdictions to help families reduce their energy costs, whether they're homeowners or whether they're renters. So let me begin with you, Acting Secretary Todman. I know that last year you undertook a review, I think, of the building codes, a review that's required under the Energy Independence and Security Act of 2007. And I understand that both from a Department of Energy analysis, but also from HUD's own preliminary determination, I think that determination was also made by the Department of Agriculture, that updating the building energy codes are a net positive for households, that they save households money because the monthly cost savings on energy bills are greater than the relatively small upfront costs of building to the latest code. And that cost, of course, is spread over the 30-year mortgage. As I understand it, your analysis showed that the cost savings are about $500 a year, which is real money, particularly for low-income households that we know are spending way too much of their paycheck on energy costs. In my state of Maryland, these updated standards would boost resilience and efficiency and for new homes, thousands of new homes, and the average new home would deliver a net savings of over $5,000 for a Maryland family over a 30-year mortgage. So could you tell me where HUD stands right now in finalizing this code determination. It's been a while since I think that preliminary determination was made. So what's your plan and timetable for finalizing this?
Great, thank you, Senator, and thank you for your leadership on this issue. HUD certainly did take a look at this along with our colleagues at USDA and DOE, and we did put a proposed rule out, and I think you're referring to some of the elements of that. The rule itself is still in our it wasn't in our interagency process, but it's back at HUD, and you will be hearing some more very, very soon about the release of a final rule, something you can look forward to. And I think that, what we've tried to do very carefully is look at the pressing needs around energy efficiency, as you so well articulated, and the long-term savings to homeowners and renters, but also looking at its intersection with affordability. One of the things that we're going to be relying on is, just recently the administration announced some of EPA's funding on greenhouse gas emissions, a reduction fund, and we'll be leaning in, and I know local localities will be leaning in on some of those funds to make sure that we're carrying out the energy efficiency work we all value.
Great, and thank you for mentioning the EPA's recent announcement, something I've worked on for over a decade. I was glad to see it finally come to fruition, and I think you're right, that can be an important complement to these other efforts. So Director Thompson, obviously FHFA also has a role to play here in terms of the public component of your secondary mortgages. So could you talk about your plans to adopt similar building standards, which would also, in fact, have an even greater impact in terms of the number of homeowners and renters who would be able to save on their energy costs?
Sure, thank you for the question. The enterprises have long been proponents of providing energy efficiency, whether it's reductions in water or energy. So they do give credit for buildings that have those efficiencies already built in. We are undertaking an analysis right now to look at the building code issue. The enterprises are working with stakeholders to do their own analysis, provide research, and we're also looking at HUD's analysis as well. So this is a priority for us, and we should probably have some recommendations coming forward on what we are going to do probably by the end of the second quarter.
I appreciate that, and I think the work that HUD and USDA have done probably provide a good model, so you don't have to reinvent the wheel when it comes to the standards. Mr. Chairman, I'm going to submit a couple questions for the record, one for each of you, and appreciate if you could get back to me as soon as possible. Thank you.
Thanks, Senator Van Hollen. Senator Britt of Alabama is recognized.
Thank you, Mr. Chairman, and thank you both for being here today. It is clear the country is facing an affordable housing crisis. High interest rates and inflation paired with soaring construction costs and low inventory have put home ownership further and further out of reach for hard-working Americans. This crisis, in my opinion, has only been intensified by Bidenomics. This administration's reckless tax and spend policies, overregulation, and misguided partisan efforts that prioritize things like the Green New Deal, or like my colleagues, Senators Hagerty and Vance pointed out, DEI programs, over the safety and soundness of our housing market and our economy. Today, regulatory costs make up nearly 24% of a new home's price. Homelessness hit an all-time high in 2023, despite HUD receiving record funding specifically to address this very issue. Not only is home ownership more out of reach, but not a single state in the country even has an adequate supply of affordable rental housing for low-income families. I could go on. There are real problems facing real people, and we have to focus on real solutions. Unfortunately, what we've seen from this administration is fast-tracking and politicizing regulatory actions that actually risk putting the economy at greater risk. And on that, Director Thompson, in a hearing last May, you said, quote, "You are committed to making sure that pilots are public and that people know that there is more transparency going on in Fannie and Freddie," end quote. So my question for you is there a reason that your agency changed paths, so to speak, and did not go through the public notice or comment period before issuing the recent title insurance pilot program?
Thank you for the question. And first, I'd like to say that safety and soundness grounds everything that we do. We do not compromise safety and soundness. I'm a longtime regulator.
Thank you for reiterating that.
Well, just want to make sure that that is the foundational understanding. With regard to the title pilot, we do have a pilot transparency page. We received the pilot from Fannie Mae, and the pilot,
Just in time for is this just in time for the State of the Union, right before that?
Well, the pilot we went through our normal process, and the pilot went through analysis. We didn't do anything different or anything wrong.
So are you going to consider actually allowing the public some time to comment on that?
Well, the pilot hasn't been operationalized yet. We are still in the process of searching for a vendor to help digitize and try to figure out how they can access the title records. The Fannie Mae is going to issue a solicitation to multiple vendors to provide this service.
And make sure we're talking about the same thing.
Yeah.
This applied to certain low-risk
refinances.
refinances, so current homeowners. So this isn't going to
Yes.
help with people who
That's
are
correct.
not currently homeowners and want to kind of achieve that American dream. It's just okay. So, you finalized, your agency did its products and activities rule, which my understanding was meant to bring transparency to new initiatives. But it seems that that isn't going alongside this actual initiative.
Yeah, this came in as a credit underwriting decision because what the pilot actually will do is waive the requirement for representation, which is similar to what we've done with
And I'm so
appraisal.
sorry, I only have 1 minute, but if you would commit to just making sure
Absolutely.
that there's public comment period and we have the opportunity to weigh in. Mrs. Todman, I want to shift my focus. Thank you so much for being here today. I understood you have been in the housing space and you look at you were included in the Moving to Work program, but obviously when the pandemic hit, we decided, or HUD decided, to postpone that program. Would you recommit to actually re-engaging now that the pandemic is over to help people really not only get on their feet but have an opportunity to actually succeed?
Yeah. Senator, you'll be happy to hear that we have been working quickly and urgently to carry out Congress's mandate to expand the Moving to Work agencies.
Excellent.
And we completed that task just 2 weeks ago.
Good, because I believe if you're an able-bodied, working-aged American without dependents, working, training, volunteering, it is to receive government benefits, that there's a dignity that goes along with that. And in my last few seconds, I just wanted to briefly underscore the magnitude of debt-funded multifamily loans that will be needed, that will need to be refinanced over the next couple of years, but can't at the current interest rates. So I just would like to work with you and urge you both to revisit the enterprise regulatory capital framework and its lack of counter-cyclical adjustments for multifamily. My staff will follow up with you, but I look forward to working with you both. Thank you. Thank you.
Senator Brett, Senator Warnock from Georgia is recognized.
Thank you so very much, Chair Brown. According to the Atlanta Journal-Constitution, there are just a handful of private equity firms that individually own more than 10,000 single-family homes around Atlanta. And during this time of elevated rates and in the middle of a housing crisis, large institutional investors and Wall Street private equity firms from outside Georgia are effectively boxing first-time, first-generation home buyers out of the housing market by gobbling up the available housing stock in Atlanta. This is particularly egregious when you think about the role that Wall Street played in what we saw just a few years ago with the crash. This is also why I previously introduced the Housing Market Transparency Act, legislation that would provide greater transparency over who actually owns properties built under the low-income housing tax credit, which includes significant private equity investors. I'd like to ask the Honorable Sandra Thompson, Acting Secretary. Thank you for all the work that your agency has done to make homeownership more affordable for Americans, but I'm troubled by the increase in private equity ownership in the housing market. What steps is your agency taking to ensure that Fannie Mae and Freddie Mac are not passing economic benefits intended for ordinary Americans to private equity firms?
Sure. So thank you for the question. And Fannie Mae and Freddie Mac do not engage in institutional investors for single-family rentals at all. The agency had one transaction in 2018 and decided to not engage in those activities anymore. So we do not permit institutional investors to purchase loans for acquisition. I would say, though, that there's a number of investors these are more mom and pop as opposed to institutional investors. Like Fannie Mae has a requirement that one person can have 10 properties, like one individual, and Freddie Mac, one person can have 6. But those, again, are more local mom and pop. They're not institutional investors.
But so are there steps, though, that your agency can take to protect ordinary folks from this increase in private equity ownership in the marketplace at large?
Well, for the loans that Fannie and Freddie won't purchase those loans because they're ineligible to make those loans. So one of the things that we do with our REO portfolio is we have a 30-day first look period where investors are not able, the house goes on the market and you have to be owner occupied or a community development investment fund or a nonprofit to purchase. First, you get 30 days before the house goes on the market. So those are some of the things that we have done.
So my larger concern, obviously, is to ensure that ordinary, hardworking American families in Georgia, all across our country, have access to the American dream. And this is what allows for generational wealth. It gets passed, allows for generational wealth. So as home prices have increased, the ability for many Americans to purchase an affordable home has moved out of reach. This is particularly true for first-generation home buyers. On top of this, we see a racial home ownership gap that actually widened in 2023. Only 44% of Black Americans own a home, a total that's almost 29 percentage points lower than white Americans. Acting Secretary Todman, under President Biden, federal housing agencies have been committed to providing resources for new home buyers. I was glad to see the president call on Congress to pass a $10,000 tax credit for first-time home buyers. Can you detail why this home credit is important and who is it targeting?
Senator, thank you for that question. And I think you've provided the facts very clearly in terms of who will be most assisted by this type of investment in first-time homeowners. And I'll take it to the next level, first-generation home ownership, which was a part of the president's proposal in his 2025 budget proposal. This is critical. We know that homeownership remains the number one way that the middle class is able to generate and sustain generational wealth. And as you so well said, there's only about 44% of Black Americans that have access to that generational wealth. And so we know that by providing concepts like first-generation down payment, we know what that means in the long term. We know that having a tax credit that allows those families who are locked out of homeownership, what it means to sort of have access to that type of subsidy to write down some of their upfront costs. But we also know that we have to do more as a country, and we're doing more as an administration to make sure that there are homeownership units to purchase by making sure we can encourage the increase of supply of starter homes. So we are looking at this in the full 360 and look forward to sharing more with you and your team.
Well, thank you. That's exactly the work that my Down Payment Toward Equity Act is focused on, helping these first-generation home buyers buy down the rate, support them with closing costs, et cetera. Thank you for your work on this, and I look forward to working with the chair and the committee to get legislation signed into law.
Thank you, Senator Warnock. And in my conversation yesterday, day before yesterday, whenever we talked with the acting secretary, we spoke about that bill and our work on it, and how Secretary Fudge especially, as we talked, that was such a high priority for her. If we're ever going to end the wealth gap in this country, surely the best tool is home ownership and what this legislation can do. Senator Cortez Masto of Nevada is recognized.
Thank you, Mr. Chair. Welcome to both of you. I just want to say thank you, both to you and your staff, for all the great work and partnership that you've done in Nevada around affordable housing. Thank you. I know you're there. I've talked with both of you. Your staff is incredible. They're on the ground, so thank you. Let me start, Director Thompson, with you. I also have to thank you and your staff for the very insightful and thorough review of the Federal Home Loan Bank system. This is something, I think you and I talked about it from the very beginning, and the challenges that I felt we needed to address, particularly around the core mission of Federal Home Loan Banks, which is housing and community development. So you did an analysis. Many of the changes or recommendations in your report are recommendations or actions that the agency can take on its own, but there's also recommendations to actions for Congress. So I want to talk to you a little bit about those. Can you tell us why the Federal Housing Finance Agency recommends Congress improve access to the Federal Home Loan Bank system for non-depository community development financial institutions, or CDFIs?
Sure, thank you for the question. We spent a lot of time on the Home Loan Bank review, and we got a wealth of information. And as you mentioned, some of our recommendations are statutory and some we can do on our own. But what we found in our discussions was that CDFIs play an important role in local communities. They communicate with all housing stakeholders in a way that is just so unique and helpful. And it produces results, especially in underserved and low to moderate income areas. And we wanted them to have the same benefits that other members have, because other members are able to commit collateral, especially if they have, I think the limit is if they're a small community institution, they can pledge collateral, but the CDFIs are not able to pledge the same type of collateral. And so we wanted to make sure there was parity, because we're talking about small, institutions and small members, and we want to make sure there's parity throughout the membership. So one of our regulatory asks is to make sure that CDFIs have the same benefits as other small institutions like community banks, so they can continue to build and provide affordable housing in their communities.
Thank you. And we know for decades the FHL banks set aside was 30% of their net revenue, 10% for the affordable housing program, and 20% to repay the savings and loan bailout. Those payments never threaten the stability of the system. Why does FHFA recommend that the assessment for the affordable housing program be increased by at least 20%?
Well, thank you again for that question. For the very reasons you mentioned, right now the home loan banks are setting aside 20% in retained earnings, which counts towards capital, but they're all well capitalized, and they can well afford to provide at least another 10% to help with this housing crisis that we're having throughout this country. They're in 11 districts around the country. They're serving all of the states and counties in the United States, and they could do a better job in providing housing development and affordable housing and community development. And I would say, though, that they are starting to increase their contributions, but it would be really helpful to have a statutory contribution, the statutory requirement increase from 10% to at least 20%.
And we both know this. The FHL banks earned $6.6 billion last year. And we've said this already, unlike Fannie and Freddie, the Federal Home Loan Banks do not pay any taxes.
Right.
So I would ask my colleagues to join me on legislation that addresses some of the recommendations that you've just talked about that are so essential to bringing more dollars into our communities for affordable housing. I only have about 40 seconds left. Let me, Acting Secretary, ask you this. Can you talk about the proposed rule to streamline the home investment partnerships program?
It's still in its interagency process. I'm happy to say that we are doing it. One, I think it's a long time coming to modernize this program that is the largest grant program the federal government has to make sure we have low and moderate income homes and home ownership opportunities. We are almost there across the finish line and getting the rule out for comments, and look forward to working with you in your office on how we did.
And we thank you. I know your staff's been great working with us on the bill, the Home Investment Partnerships Reauthorization Improvement Act that I've introduced. It was part of the subcommittee hearing that Senator Smith was just talking about with Senator Lummis. And there was a conversation how important this program, the home program, is to building affordable housing in communities across the country. So thank you for your good work.
Thank you.
Thanks, Senator Cortez Masto, and you're almost done. So I think no one else is coming. So I have a series of questions, and sometimes waiting to last, I can get a better overview of the committee and the questions and what we want to talk about. And starting with Secretary Todman, you and I talked about the HUD-assisted properties in Toledo, Ohio, and Northwest Ohio that the city cited for deplorable conditions, Ashland Manor and Covenant House. I demanded that HUD cooperate with Toledo officials to fix this situation. HUD's been working with the city of Toledo. Will you commit in front of this committee publicly to continuing to work with the city to see the job through, to fix the conditions at Ashland Manor and Covenant House, and to hold the landlords accountable?
Absolutely. And I made that commitment to the mayor of Toledo as well myself.
Good. I'll be holding you to that. It never should have gotten to this situation. No one should have to live that way. I want to follow up with you on what HUD is doing to better identify poor conditions and irresponsible owners before they hurt residents and communities as they did in Toledo. Count on that. Director Thompson, turning to manufactured housing, I've heard from Ohio seniors who live in communities financed by Freddie and Fannie who are forced to go to extreme lengths to keep up with the rising rents and fees that out-of-state investors are charging. We're seeing more and more out-of-state investors, as you and I have talked in the past, in manufactured housing. How do we change the system so that when Fannie and Freddie are getting credit for providing affordable housing, residents can actually afford their rent and aren't forced to choose between keeping their homes and buying food and medicine?
Great, thank you for the question, Senator. We really are working with the Duty to Serve program because we believe that there ought to be a penalty. The Fannie and Freddie should not get credit for the situations and circumstances where the homeowners are not getting updated property maintenance or they're living in conditions that are just untenable. So we're thinking about ways to address those issues. As you know, for manufactured housing communities, there's a set of tenant protections that are required for anyone who gets a loan from who has a loan from Fannie or Freddie on a manufactured housing community. And we also have them sign compliance agreements every year to ensure that they're complying with the tenant protections that are in place. In addition, both Fannie and Freddie are getting ready to establish, asset management oversight so that they can make sure that these properties are in good condition and that people are living in safe, decent, and affordable housing. There was a lag during the pandemic where inspections were not taking place, and we really have a lot of catch up to do and want to make sure that we're doing our part to make sure that Americans across this country, especially in manufactured housing communities, are able to live with dignity and respect and in conditions that are safe and decent.
Thank you. Back to you, Secretary Todman. We have neighborhoods in Cleveland. In fact, in the zip code where I live in Cleveland, where my wife and I live, that zip code at some points in the early part of the housing crisis a decade and a half ago had the highest number of foreclosures of any zip code in America. In neighborhoods in Cleveland throughout Ohio, too many children are still poisoned by lead. You know that. Through efforts like Lead Safe Cleveland Coalition, Ohioans are working to make progress and protect kids. Your testimony proposes improvements to HUD's Healthy Homes program. I want to follow up with you on how this proposal will support efforts like these to prevent lead poisoning. We'll be back to you about that.
Very good.
Thank you. Director Thompson, after the 2008 crisis, Fannie and Freddie briefly provided financing to help investors buy up and rent single-family homes. Some of that financing is still benefiting a company called Vinebrook, which owns thousands of homes in Ohio, has a track record of running properties into the ground, of evicting families, of driving up local housing prices, a particular problem in Cincinnati. I visited some of those houses and neighborhoods. Will you commit today, Director, that Fannie and Freddie won't do any new financing for investors in single-family rentals who so often exploit tenants and drive up rent and housing prices?
Senator, thank you for bringing that to my attention. After the experiment or pilot that Fannie and Freddie did in 2018, we have prohibited them from working with institutional investors, but what you have described, we'll absolutely follow up and make sure that that does not happen, but we'll follow up on that particular property.
And I will continue to watch that, and you know we're watching that, and I appreciate the public service of both of you, but that kind of predatory business model needs to be rejected always by anything the government, any influence the government can have, so thank you. Thank you to the two witnesses today for your patience. Thank you for your testimony. Thank you most especially for your public service. Senators who wish to submit questions are due 1 week from today, April 25th. To the witnesses, you have 45 days to respond. Thank you again for that. With that, the hearing's adjourned.